Okay, let's talk budgets. Joining us now on The Debate in Victoria, British Columbia via Skype, Paul Somerville, adjunct professor, the Peter Gustafson School of Business at the University of Victoria. In Montreal, Quebec, William Watson, professor of economics at McGill University. In the nation's capital, John Manley, former finance minister and president and CEO of the Canadian Council of Chief Executives, and Armin Yalnizyan, senior economist with the Canadian Centre for Policy Alternatives. And with us here in the studio in Toronto, Michael Smart, professor of economics at the University of Toronto. And as I welcome everybody to the program tonight, you know that the verdict is already starting to come in on this budget. If you're a fan, it's a jobs and prosperity budget. If you're not, it's a mean, austere budget. Let's go across the country, west to east, and find out what you all think. Paul Somerville, what's your verdict?
Well, my verdict would be, is that it? I mean, I'm struck by the fact that the Conservatives had a year to go through every line of revenue and spending to decide what they wanted to do. They had 6 years since Stephen Harper became Prime Minister, to rip apart everything that the federal government does. And Stephen Harper has probably waited 28 years since he first left the Liberals to join the Conservatives to have this chance as Prime Minister of a Conservative government to deliver a budget. I don't think it's a Conservative budget. I think what will be interesting is the Reform side of the Conservative Party, how they will react to the fact that probably from a Conservative perspective, not a Liberal perspective, that the Conservatives really haven't done a whole lot.
Okay, let's move east. Michael Smart, what's your view?
Well, it's certainly not an austerity budget. I think, frankly, the view of many of us today is that it's a bit of a boring budget. There's not much in it, in spite of a lot of suggestions in advance that we might see market austerity, that we might see a move to a conservative agenda. This budget doesn't have elements like that. It's business as usual for what we've seen from this government over the last 5 years. Now, I want to say to your viewers before they switch to another channel, although it's a boring budget, it's interesting to think about why this government's still giving us boring budgets.
And we'll follow that up as we go along. Let's keep going east. Armin Yalnizyan in Ottawa, what do you say?
Well, it's a fascinating budget to me. And the finance minister himself said it's a long strategy. So in fact, embedded in this hide and seek budget are a lot of clues as to what's going to come. Much more reliance on resource extraction. That is our industrial strategy. The hell with environmental problems. We're going to fast track these developments. In terms of jobs and growth, well, they used to campaign that tax increases were job killers. They're the job killers now. You mentioned off the top 19,200 jobs that are going to be axed in the next 3 years, 7,000 of which are through attrition. But it comes on top of other cuts that were taking place. Now, let me put this in context. Some people don't think there was a deep enough cut. We didn't need to cut one more thing. We're $8 billion ahead of where we thought we were going to be even in November. The economy is performing so much better than we thought. So if they were looking for $8 billion in savings, it happened because of a windfall, because of what we've got in this country. So in fact, it's penny wise and pound foolish. We are not dealing with the things that we need to deal with, like infrastructure, which, you can defer that for as long as you like, but the costs just keep escalating as the costs of borrowing increase and as labor shortages mount and raise the price of wages. We are actually passing on to the next generation, not a balanced book or an unbalanced book problem, but the problem of a deficit in infrastructure maintenance and the problem of environmental degradation that comes along with lickety-split as fast as we can get it out of the ground, selling stuff to others around the world. And that is not either prudent nor responsible, given the incredible situation we're located in right now.
Okay, I'm going to make the guy beside you just wait a second because he's actually done this before. So John Manley, you sit tight. I want to hear from William Watson first in Montreal, and then we'll come back and get you to sum up. William Watson, what do you say?
I think it's an interesting budget. You got to remember the perspective. We had a crisis in 2008. We said we would raise the deficit for a couple of years by a couple of points of GDP until the emergency was over. The emergency is over. We're getting back down onto the glide path. If you look at the 5-year projection, 5 years from now, the federal government will be bringing in $65 billion more than it is now. What's it going to do with that? It's going to spend roughly $30 billion on new initiatives and filling old initiatives as well, $5 billion more on interest, and then the rest is deficit reduction. So it's kind of, 50% deficit reduction, 50% spending growth. And I don't think it's very conservative. I really don't like the new strategy for bringing about profitable growth in the business sector. I think there's a lot of spending there that instead of trying new ways to encourage university professors to do things that are forward-looking and profit-oriented and will make us the next Facebook or the next BlackBerry. I guess we want to do a little better than that. The government shouldn't be in that business. It shouldn't be in the industrial policy business. So I'm a bit with Paul that it's hard to see conservative actions here. Actions on the CBC, that would please reformers. Getting rid of Katimovic. I assume Justin Trudeau's going to go on a hunger strike about that one. So there are little bits of true conservatism here, but basically fairly balanced.
John Manley, as I ask you for your verdict, my first question before that is, what was the size of the surplus in the last budget you brought in?
It was. It ended up at $9 billion, Steve.
Okay, $9 billion surplus, and today we've got a deficit clocking in at $21 billion, and we're supposed to consider ourselves fortunate that it's only that size. With all of that having been said, what's your verdict?
Well, I would characterize the budget first as being somewhat cautious, with a few things that are, as the minister characterized them, more forward-looking, longer term. Particularly, I think he's talking about the OAS changes. But I think that where we needed to be was to resume, as was described, the glide path. We should be trending our debt to GDP ratio down. We should have a target. I think it should be somewhere below 25%. That enables us then, when times get tough, to be able to respond. We were in very good shape going into the recession in 2008. Canada was able to spend, in terms of absolute numbers, as a stimulus package, the fourth largest amount of any country in the world. We were able to do that because we'd had 11 consecutive surpluses. We'd paid down our debt. We were in much better shape. And I think there are lots of examples for us to see around the world now where the inability to discipline the relationship between revenue and spending and the inability to keep revenue sources to a modest enough level that you don't discourage growth it's hard to do, and for us to be returning to the ability to achieve that is rather important.
Let's talk about deficit reduction. Once again, go out to the left coast. Paul, the government did say during the last election campaign that they'd balance the books a year earlier than they are now telling us that they will. They're now saying 2015-16, but they're saying that the amount of deficit in that year will be about $1 billion, which makes me think that probably they're going to figure out how to balance in an election year. You want to help us out, understand some of the politics behind the deficit reduction numbers?
Well, I think you've nailed it right on the head. I mean, this whole process is designed so that in 2015, when there's a federal election, that Stephen Harper will be able to go across the country and tell Canadians that they're back to a budget surplus and that this is a great thing no matter how they get there. And this is really the powerful message that I think is part of today's budget, that this is a government that wants to run on a budget surplus. The interesting thing, though, is it really depends on economic growth rolling out the way that the budget is favoring, which is resource development and business investment. The reality is with the kinds of cuts that are in place, not only at the federal but also at the provincial levels, with household debt in Canada, at very high levels, that part of the economy is probably going to be a net reduction on growth. So what has to happen is that the business side has to click in, and this is going to be the real test, because those economists that have argued really for a generation that lower corporate taxes would inevitably result in higher levels of investment, and that hasn't happened in Canada yet.
Let me get Armin Yalnizyan on that. Armin, in fact, the corporate tax cuts that have come in Have they resulted in more job creation? Have they resulted in higher corporate profits, which of course raises stock prices, et cetera, et cetera?
So we have seen corporate tax rates go down to levels that effective corporate taxation, what corporations actually pay as a sector, has dropped down to levels of the early 1940s and are heading down to the 1930s. So we've seen massive reductions in corporate taxation. We've also seen corporate profits go up to record levels in 2007. And while we haven't bounced back up to that level of the economy yet, we're getting very, very close. And yet, throughout all of this story, business investment in machinery and equipment has been declining. So the very opposite of what should have been happening. As you dropped corporate taxation, you should be getting an uptick in investment. The opposite was happening. And not only a reduction in investment in machinery and equipment, which brings the value-added jobs, which brings us the greater productivity, but also a reduction in the number of middle income paying jobs with good benefits and good pensions and good wages. In fact, we have seen a hollowing out of the middle since the recession and an escalation of just-in-time workers, that is temporary work rather than permanent jobs. We lost permanent jobs and we regained some of them, but the fastest growth in jobs in the private sector has been temporary jobs. You can't build a permanent recovery on a temporary foundation.
Okay, let me get William Watson here then on deficit reduction. Of course, how you get there is key. Everybody wants to balance the books, but how you get there is key. So, William Watson, when you look at what this government plans to do to get there, do you like what you see?
No, I think they're doing some spending that would please our mean. You know, it's this research and development type spending. It's to get high-tech industry going. I think the guys and ladies who live in the Ministry of Industry, they like playing businessman or businesswoman. I think if they really wanted to do that, they should go off and have a business career. They shouldn't pretend that they know how to distribute money across high-tech firms, startup firms. You know, there's a passage about how we need more angel investors in Canada. So the departments of industry are going to be angel investors. On corporate taxes, they're 1.8% of GDP in 2010-11, and they're basically constant through the next 5 or 6 years, 1.9% of GDP. You know, it's not clear who pays corporate taxes. It's not clear that the higher corporate taxes are good for workers. You know, the conservative approach to this thing is let business do business, and the government will take care of pressing needs. I mean, they're spending more on native reserves, something like $300 million to provide water on native reserves. Now, it may well be that that's the kind of thing that the government should be doing, but trying to decide, you know, what's going to be the high-tech industry of the future and replacing venture capitalists and things like that, I think that's money going to be wasted.
Okay, let me go to John Manley in Ottawa, because you've no doubt brought in some budgets in your day that did have some government intervention in an effort to either stimulate business to do certain things. What do you think of what they've got planned today?
Well, actually, I think most of the measures that on those scores are fairly modest and are not likely to have a very large effect. I think the key things that government has to do in order to stimulate the kind of activity that we're talking about is to ensure that we have a good source of skilled, intelligent, smart people that are able to occupy those jobs, that are able to innovate, that come up with ideas. You know, I mean, we're all putting down RIM today, and I guess that reflects the fact that they've had a few bad quarters. But you know what? They were the first people to think of a device that you could carry around and send text back and forth. Nobody even knew they wanted that. And now everybody's making it, and sure, they've lost a little bit here and there, but it's that kind of innovation that we want to see. And I just, quite frankly, I agree with Bill Watson. I'm not sure government is able to, through its machination, through its policies, to bring that about. I hope these measures work. We certainly need more companies that are innovative, that are creating new products and services. But that's going to require creative, thoughtful, intelligent people with the right kinds of skills and training.
Michael Smart, your view on that, the innovation agenda, the hundreds of millions they've put aside for that?
Well, as Bill said, I think the striking thing is the way in which they're delivering that assistance. This is an important problem that Canada faces. We do have a productivity challenge. It is the case that R&D by Canadian businesses is low relative to the average of our trading partners. And so I think the government recognizes that they need to do something. They commissioned a report on this in the last year. But I'm surprised by the way they've chosen to go. So the rhetoric that we get from this government is about getting out of the way of business, allowing the economy to do its thing. And yet what we see in this budget is more direct spending on business, a continuation of a number of programs they brought in during the recession to essentially allow crown corporations to assist business in a variety of ways. That's going to go on even well after the recession. And more of this kind of support, not only is it being directed, as Bill suggested, by people who are probably not the most innovative in the economy, but more and more of it seems to be directed to small business. And that's certainly part of the agenda of this government. And that's directing lower and lower taxes and more direct support to small businesses. And you know, whether you think that's the right way to go or not, it has to be recognized that there's a disconnect between what they say they're about and the fiscal track they're putting forward. And this is not simply a question of austerity that we need to have. You know, frankly, the situation is quite good. It makes sense for the government to try to take us onto the glide path that they're doing. Our situation is quite positive relative to our competitors with regard to the fiscal stance. So that's all fine. But it's the nature of this support.
Let me follow up with William Watson on that then. I mean, there's no government of any stripe, I think anywhere in the country today, Professor Watson, that says we don't have to be players in the innovation agenda at all. We should just sit back on the sidelines and let the private sector do anything. Every government puts money into a pot for something on this. I know you don't like that, but that's the way it is, isn't it?
Are you asking me, was it likely that they would do something like this? Well, sure, it was likely that they would do something like this.
But do you think there's no value in doing any of this stuff?
Is it going to work? I don't think it's going to work. You know, you're trying to get a government agent to come in, talk to a university professor, find out what they're doing, and then start thinking of how could it be applied in a way that could make money for him or her, found a profitable company, and then employ lots of Canadians. And, you know, there's nobody smart enough to do that. I think the Canadian advantage from people around the world would be that we stopped doing that kind of thing. You know, I'm a lot older than Michael. I've been reading budgets like this for going on 40 years, and they all say that we do less R&D than our trade partners, and we've had program after program after program trying to fix that problem. And I just think it's time to say, government's not very good at this. Government probably is pretty good at some other things. I think it's a short list, but you know, there is a list. Have government do that. So yeah, I think it's inevitable that they're going to try something like this, that it's sexy and glamorous and high tech, and it causes a lot of ribbon cutting ceremonies as you go around the country handing out money. It's good for ministers. They can get lots of web page views and so on. But
okay, well, let me go to Paul Somerville.
Call me skeptical. Color me skeptical.
I'll color you skeptical, and now I'm going out west because I want to know, Paul Somerville, you're not just an academic and a guy who works for a university, but you're a former Bay Street economist for one of the big banks. And I wonder where you're coming from on this issue of the hundreds of millions the government has allocated in this budget to try to stimulate some innovation in the country.
Well, this really comes down fundamentally to the question of how an economy works. And the conservative view is that there's very little that the state can do to make the economy work better. I actually fundamentally disagree with that, partly because of the experience of countries that have had intelligent investment. The military, in the case of the United States, was really the base for Silicon Valley. Some of the investment that was actually done in Alberta in the 1940s around oil and gas exploration was the foundation for the oil and gas industry in Alberta. So the question would be, well, what kind of things in the 21st century would it make sense for the federal government to do? And I think the obvious thing is the environment. High-speed rail, smart roads, investing in large infrastructure projects generally has in the past in many countries been a highway to successful spin-off businesses.
Okay, how about money for venture capitalists, though?
I think that's really a wrong place for a government to be. So I agree with William.
You agree with Bill Watson on that. Okay, let me, Armin, start us off now on a bit of a debate here about the pension reform issues that they've raised in the budget today. They want to move the eligibility age for old age security to 67 from 65, where it is right now. They say if we continue on this current path, the program is unsustainable, and that's why they're making the changes. What's your view on that?
Well, do you know, they always talk about the tripling of costs until, I guess it's 2030 that we're going out. So in 20 years, the costs will triple. But if you go back 30 years, the costs quadrupled, and nobody ever said we can't afford it, because we knew that the economy is going to grow faster than that. We're pretty confident that the economy will grow faster than tripling in that period. And the other thing that's going to be coming down the pike is, so you're getting people to work longer, some of whom are going to be sicker when they reach 65. There's an awful lot of people that enjoy working when they reach 65. They're healthy and they're wealthy and they've got great jobs and they'd love to work. But there's also a lot of people that are bone tired by the time they hit 65. Construction workers, housekeepers, people that are doing manual jobs on assembly lines. So we've got a real issue there. Do we need to bump that age forward? Probably not. Would a lot of people like to keep working? Yes, they probably will. What that mix is I don't think a good idea for public policy to weigh in. There's different ways you could claw it back if people are working and enjoying their lives working. But the bigger story here is that we're not giving the next generation a chance to get into the labor market now. We're talking about how we need to bring immigrants in better, rather than looking at how are we bringing these young trained people with mountains of student debt into the workforce, getting the training, getting the experience. You talked about how do you get innovation. Is venture capital the biggest story? Well, even the marketplace doesn't know how to do venture capital. Does the government know how to do it better than the market? Probably not. Do we know how to utilize young people's strengths? Well, we do if we hire them, but we're not hiring them. They've been locked out of the recession since July of 2009. In fact, there's more people of that age group without jobs now than there was in July.
Let me get John
2009.
Manley in here if I can, Armin, because again, I want to stick on this pension issue. John Manley, if you were Minister of Finance today and your parliamentary budget officer was saying to you, we actually don't have a crisis, the program actually is sustainable, you don't have to raise the eligibility age to 67, would this provision have been in John Manley's budget today?
Well, I would say that's probably not the right question. In fact, I think what we've got is an increase in the old age dependency ratio, which is that our population is aging. I don't think in the medium term and the longer term we're going to have a shortage of jobs. I actually think we're going to have a shortage of people to fill them. And so I think if you're looking at those numbers and you say, well, are there any things that we can do in order to encourage people to stay in the workforce longer? One, we eliminate mandatory retirement age. Well, tick that one off, that's good. And another would be to say, well, your social program for pension, which is the OAS, will only start a couple of years later. I actually don't think this is a big deal. It's so far out, and it's of such modest significance in the overall scheme of pension income that it's not really that big. Most people in their 30s and 40s aren't even thinking about this yet, but it does address the alignment of workers with jobs in the future as the population ages.
Michael Smart, do you agree this is not that big a change?
Yeah, I completely agree with John. I'd say, first of all, this is not fundamentally an issue of fiscal sustainability. This program is as sustainable as we choose as a country to make it. We can certainly afford to pay for it with minor adjustments to taxes. I think the best estimates are that as a share of the economy, the program will grow by about 50% over the next 20 years. But it's a relatively small program overall.
If you're a government that in its DNA, in its bones, cannot stand to raise any taxes at all, do you therefore have no alternative but to raise the eligibility age?
Well, I mean, that's another question, and a question that I hope we'll get a chance to talk about. Certainly.
I'll answer it now. I'm asking it.
Well, it is striking that we are facing fiscal challenges as a country, not so much, as you know, at the federal level, but at the provincial level. We're facing growing fiscal pressures due to demographic change, and the discussion of tax increases to pay for them does seem to be off the table. And I think that fundamentally that will have to change over the next 10 to 20 years in some respects. There are ways in which we can make do, we can economize on these programs in order to limit the impact. And this may well be one of them. This is certainly a legitimate choice for a government, as you say, a government that's opposed to general tax increases to want to make. And yet it's not an insignificant one. I wouldn't go so far as John Manley in that regard. For somebody like you and me, somebody who's going to experience the full effect of this change, it's about a 15% a decrease in your expected lifetime payments from the program. So in some sense, people who are going to retire starting in 2030 are taking a bigger cut than anybody else in this budget. So that's quite significant. And I think there are two sort of design features of it that should be thought about carefully, and that I hope that the government, as they go forward, does continue to think about carefully. The first is the impact on the most vulnerable in the population. So, a lot of us, I think, could manage a 10% cut in one component of our retirement income, given that we have enough time to plan for it.
And the second one?
For the lowest income elderly people, this will mean for a couple of years, when they may have very low ability to work in the labor force, they'll be facing a much more significant cut to their annual income. And so that vulnerable group, I think there were other ways the government could have chosen to address that in how they made this change, and that's something perhaps that should be reconsidered. The other one, very quickly.
Very quickly. These guys are getting very mad at me because you're hogging the clock now, so go ahead.
Is the intergenerational component.
Intergenerational,
so
yes.
This is another case in which the people at the end of the baby boom are being asked to pay for not only the generation that came before, but pay in terms of lower benefits for what is to follow. And so, that's, again, a discussion that I think that we have to have as a country. Are we comfortable with the way in which the burden of these changes is being distributed across the population?
William Watson, the OAS changes today, up or down?
I think up. I would have preferred that they take place about 15 years ago. But we don't have that option anymore, and therefore I think it's a sensible thing to do. It's the so-called dependency ratio. We've got 4 working age people per retired person now. We're heading towards 2. Now, I'm uncomfortable with 20, 30-year projections, but I guess population projections are a little safer than most others. I think the opposition, as Mr. Mulcair suggested, or at least listening to him made me think, is going to try to fight pretty hard. I don't know how much Canadians are going to respond. It is 11 years before anything happens. It's then 6 years after that. I think they've essentially taken all the time that they could so that it would happen before 2030. My God, 2030 sounds like, it's way off and never land. But the 2020s are at least the next decade. So yeah, I think people like me are getting away with murder, and people just a little ahead of me even more so. But better late than never in this regard. Okay,
Armin, start us off on this next round here, and I want to talk about whenever governments retrench, when they feel a need to cut back on spending. They always worry about doing it too much because they don't, as they try to reduce the burden on taxpayers, they don't obviously want to bring on another recession because they're removing themselves and the influence they can have on the economy by too much. As you consider that question, how did this government do on their budget today?
Geez, you lost me on the question. Can you try
Sure.
it again? I'm so sorry.
If I understand economics properly, governments everywhere in the country today seem to want to cut back. We're in austere times. They want to spend less. They've got to find the sweet spot, though, so that they don't cut back on their spending too much, or they could propel us into a recession again. I want to know whether you think the government's hit the right sweet spot today, or whether they've cut back too much or not enough, or whatever. Your view.
It's really challenging because we had 86% of the population of Canada, their provinces, have already tabled budgets. Almost all of them have been austerity budgets, cutting back quite hard. As I mentioned before, in 3 years' time, we will have cut about 19,500 jobs through this process, just today's announced round of cuts. That comes on top of other cuts that came before, so budgets of 2010, 2011, and 2012 pile on to reduce the job count by about 35,000 people. Now, I'm focusing on job count rather than on services or on deficits because we're sucking all this purchasing power out of the economy. And the private sector is not creating the type of jobs that are the jobs that are being cut. So this is a bit of a gamble, what's going on right now. And, time will tell. The economy really is performing better than expected. And in fact, like I said before, Canada's got what the rest of the global supply chain wants, which is resources. But we're not really taking advantage of that demand for what we've got to create the value-added jobs, to do the innovation by having people learning, by doing really good stuff, and actually investing in the next generation, the young people, because really the source of innovation, the source of economic growth, the thing that's going to prevent a fiscal drag over the long haul. If we get too reliant on resources and not enough on how smart we are and what we can offer the world and become energy leaders and energy efficiency leaders, like energy retrofits. These things are things you can teach people to do, but we're not investing in the next generation.
Let me get Paul Somerville on this. Paul, did the government retrench so much today that they may have in fact cost us a few points of economic growth looking forward?
Well, I think it must be the amount that they're cutting. But let me put on my chief economist hat on for a second. The reality is that the government is making a big bet, and that is that the fault lines in the global economy are not going to create enormous economic distress in the coming years. First of all, bond yields in Italy and Spain are starting to rise again, which tells us that the euro crisis isn't over. There's lots of signs that China is going to have a lot of trouble navigating the adjustment from export-led to domestic-led growth. And the U.S. economy is still very weak because of the weakness in the housing sector and the deleveraging that's going on. So the reality is this budget depends probably more on what's happening outside of Canada than what's happening inside Canada. And this goes back to the point I made earlier about the economic risk. And the other thing that TD Economics cited in their report on the budget is that there are some very ambitious interest rate calculations in this budget. That if interest rates start to rise because of inflation, this budget would also get tipped over. So there's a lot of risk embedded in the global economy that this budget would not be able to navigate successfully.
John Manley, does this budget cut spending to a dangerous point where it could cost us economic growth going forward?
No, I don't think so. I think that it's actually very prudent with respect to the level of cuts. In fact, I would say that the answer to those who are saying they didn't do enough, they didn't cut enough, is exactly the uncertainty that Paul Somerville has outlined. But things look a lot better right now than they did even just 2 months ago when we were in the throes of the Greek crisis, and Greek bond yields have dropped precipitously since the 12th of March when the package was finalized by the European Union. So I think we've got a window here where we don't have amazingly strong growth, but we have a decent level of growth that gives us that opportunity to try to get back into balance. And you can't squander those opportunities. We've seen that in the last 3 or 4 years. If we squander that opportunity, then we're going to be finding it more difficult in the next time there's a downturn. We're looking at countries around the world that are doing very drastic cuts in order to try to restore their credibility with the bond markets that ultimately have to lend the money. And we're much safer to take a cautious road, get ourselves back on the path to balance, and be prepared the next time the storm breaks out.
William Watson, what's your view on that?
The job cuts in the federal public service, 19,000, that's 0.1% of total employment in Canada, 0.1%, 1/10 of 1%. They're going to spend $900 million making those people, easing them out. So, and most of them are going to be retiring in any case. The public service has the same colored hair as I do. If you look at the net measures that they're taking, 1.4 billion net this year, 3.9 billion net next year, 5.3 billion net the following year. 1% of GDP is about 17 billion, right? So these are tiny little numbers. There's no way that this is going to push us back into a recession. If really bad things happen elsewhere in the world, yes, we'll go back into a recession, but this budget is not going to do that.
Michael Smart?
Not a chance.
Let's just put a few more facts on the table along those lines. We're looking at cuts that when fully phased in, not immediately, will be about 5% of the discretionary component of the federal budget. That works out to about 1/4% of GDP when fully phased in a few years. When all of that is done, the federal government will still be spending more in real terms per person than essentially the government ever has before. And so, I think it's pretty clear that the macroeconomic impacts of this are overblown. Those changes are very small compared to the kind of risks that we've been talking about, the risks of interest rate changes, of economic changes in Europe having spillover effects on us. Those things are largely out of the government's hands. What they're doing doesn't change those risks in a fundamental way, I would say. much more important is the conversation we have to have about what kind of government we want to have, how big should it be, and what should it be doing.
Well, let me follow up on that with Armin. We just got a couple of minutes left here, so let me see if I can get a couple of quick answers on this. You know, most conservatives in this country, Armin, think this conservative government hasn't been very conservative at all. But my hunch is you think they're still being way too conservative. Have I got that right?
Well, I think the acid test of any government right now, given what's been going on in Canada and around the world in the last few years, is are they making the gap between the rich and everybody else bigger or smaller? Are they addressing that issue? And are they dealing with the infrastructure overhang that we've got? And in both cases, every single budget since 2006 has advantaged those who are already most advantaged and basically disregarded those who are at the bottom of the pie. So they've grown the gap with every single budget, and they plan to do it as soon as we hit another surplus. And in fact, they're now starting to do it with the most advantaged businesses through their venture capital. And they're doing nothing about the things that bind us all, that both communities and businesses rely on, which is infrastructure. They viewed the infrastructure spend as an extraordinary measure for a case of an economic crisis. We've got $125 billion of infrastructure that my parents and my grandparents' generation built, that if our generation doesn't start putting our back into this and paying a little bit more to fix it, we're simply passing that deficit on to our kids.
Okay, let me go to John Manley beside you. Mr. Manley, this is a big C conservative government. The Prime Minister is allegedly a conservative economist. And yet I hear conservatives all over the country today saying there's nothing conservative about these guys. You tell me, is there?
I'll go back to my very first comment. I think it was cautious. It was cautious on both sides. It was cautious in the degree to which it cut, because I think of some of the worries we were just talking about in the last question, Steve, that there is still a lot of uncertainty. The uncertainty 2 months ago was much greater, but it's also cautious in the sense that it is seeking to ensure that in a reasonably short period of time we get back to balance. So I wouldn't try to characterize it ideologically, particularly now that I'm in a post-partisan part of my life. I'd say, when you're the finance minister, there are a couple of things you want to do. Number one, you don't want to surprise anybody on the downside because bad things happen. Number two, you want a day of questions and question period, and by the next day, nobody's asking questions about the budget. I have a feeling that this might have hit that spot.
And on that post-partisan note, that seems like a good place to leave things tonight. Can I thank all of you for coming in tonight and sharing your views on this 2012 Canadian budget, starting with Paul Somerville at the University of Victoria. We thank you, Paul, for joining us via Skype tonight. That worked pretty well tonight. Thanks so much for being there on the left coast for us. And on the other end of the country, William Watson, the McGill University economist. In the nation's capital, John Manley, former finance minister, now with the chief executives. Armin Yalnizyan for the Canadian Centre of Policy Alternatives. And here in Toronto, Michael Smart from the U of T. Good to have all of you on the program tonight. Thanks so much.
Support Ontario's public television. Donate at tvo.org.